in these videos, we typically tend to look at technical analysis for the most part. However, sentiment data is also very important at certain times because it can give us a good understanding of herd mentality. In this video, I want to take a look at the sentiment cycle in the growth and innovation sector by using the ARKK ETF. Then I'd like to take a look at consumer optimism in terms of where they think the stock market's going to be over the next few months. We're then going to take a look at news media articles having to do with the term bear market rally and see if we can gain any information from that. And last, we'll take a look at corporate insider buying on the S&P 500. Now, for starters, what we've got up here is we've got the ARK Innovation ETF chart in the background, and we have our sentiment cycle right here. And this goes back over the course of about 6 years. You can see we have that takeoff phase, and then we have our first sell-off. We have our bear trap. We have media attention. Then we've got enthusiasm, and then that leads into greed, delusion, potentially the new paradigm up here. We turn back down. We've got a bull trap because we ultimately roll over. This was the return to normal phase, and we have fear, capitulation, and potentially despair, and we might be headed towards return to the mean. Now, if you take a 45-degree angle, the mean over the last few years would be somewhere around this point, right? And the reason why this is so important, I wanted to take a look at it, is we have, from a technical analysis standpoint, the lows from 2020 is essentially where this the sector of the market has started to make its bounce. It's got a couple of green weeks in a row. There's some really big volume here, right? We could be turning that corner. And what we need to pay attention to is this particular low, because if we roll back over, then instead of being about here on this sentiment cycle, we could still be here. We don't know if we're still in capitulation or all the way to the despair turning the corner, and so we're going to continue to pay attention to what goes on here in this space. But if this low can hold and we start to turn back up, that does give pretty good credence that we might be out of the worst of it and we could be kind of returning to the mean. It doesn't mean we're going to go straight back up again or anything like that. It's just we might be done with this complete unwind because we have gone through an entire cycle over the last few years. So this low is very, very important. It's definitely what we want to be paying attention to. Now, next up, what I want to take a look at is our stock market optimism among consumers. And so this is taking a look at what the consumer is expecting here over the next couple of months. And right now, 43% of consumers expect stocks to fall and 28% expect them to rise. And that gives us a negative reading, closing in on that negative 20%. Now, this data goes back to 1987, and since then we have only had a handful of times that we've fallen below this zone. We had 89 and 90, and that was right in here. You'll notice we dropped a little bit more before we had a big rally. The next time it happens is in 2002, 2003. We're right in this zone before that big rally. Then it happens in 2007, and this is what I really want to point out to you guys. Right, we fell below and we kept falling very sharply, and so did the market before ultimately, when it got back above this, turning around. In 2011, right, we're right in here. We fell a little bit before turning around. The key is once we've fallen below this, the market typically tends to fall a little bit further, and once we get above it, the market looks like it wants to essentially rally from that point forward. We're trading right there at that key level. If we continue to have a washout and we have more and more people expecting lower prices, they're going to act accordingly, and as we continue to fall lower and lower into this zone, that does open the door for more potential selling. If we hold this zone right here, what we have seen so far this year, we might see that turnaround. So what happens here is very, very important from a sentiment standpoint. Next, we're taking a look at the news media, and we're paying attention to the term bear market rally. This is the number of articles that show up for that particular search term. Now, this data goes back 10 years, but you can see as those searches continue to go up, that has marked some turning points here in the past. Like here we are in 2018-19 in this zone. Here we are in 2020 in this zone. And look at this now. This is a much higher amount of search terms than at any other point in time. And this is happening at a spot where markets have started to tend to turn around here over the last couple of weeks. Now, just like anything else, if we start looking at the beginning of these searches, it's not quite at the bottom. It's always been a little bit right before. There's a little bit left in the tank to the downside before things turn around. So we're going to pay very close attention here. Again, if we can get back above, and you can see the importance of this zone, we've talked about it on the S&P 500, above that key level and push back up from the FOMC sell-off day, it gives a little bit more credence to the market actually potentially have putting in a bottom. Right? We don't have that confirmation at this point. But what this data set is telling us is people are looking for that bear market rally. The media is pumping out that information. And so historically, that has actually led to legitimate rallies, because what has happened is the majority of traders might be unwinding some of their long positions on the bounce and not be positioned to capitalize on that move higher. The market's job is to make the most amount of people wrong at the turning points. And so this is one of the ways in which that is done. So we're going to pay close attention to what happens here as well. One of the things we like to pay very close attention to is what insiders are doing. Now, when insiders sell stock, it doesn't necessarily mean that markets are going lower, because a lot of insiders have stock that they sell consistently on a regular basis. But when insiders start buying stock, there's really only one reason why they're doing that. They believe that their businesses are in a good place to see stock prices rise. And what we're looking at here is every time we've gotten above that one zone, okay, here over the last 10 years, right? We've got this move higher. This didn't work. About 6 months later, it started to. 19, we saw buying come in. 2020, we saw huge corporate insider buying near this bottom period. And here we are once again, right? Now, as again, you can glean from this, none of these mark the exact bottom. They all continue to either head lower for a little bit before making a turn up. But what we can glean from this information is typically, when insiders are making large net purchases of stock, we have been somewhere near an actionable bottom. It doesn't mean it's the bottom. It doesn't mean markets shoot higher. It just means typically we have seen it happen near an actionable bottom. In 2015 and 16, it did still take a year before we made that breakout. Right? So it's not instantaneous. But when we take a look at all of those different pieces together, we've seen the growth and innovation take potentially a full sentiment cycle. We've seen consumer optimism for what's going on here over the next few months at basically 35-year low zones at a very key level. We see a ton of media pumping out of bear market rally, meaning this isn't going to hold type of articles. And last but not least, we see those large corporate insider buying. It does give some credence to the potential that we might have hit a bottom a few weeks back. We're going to need to pay very close attention to all of these different sentiment readings, because again, there's levels that if we fall back below, we can certainly open that trapdoor to the downside like we saw back in 2007 and 2008. It's just one more piece of the puzzle that we want to take a look at. As always, I hope you guys found this content useful. Hope you guys have yourselves a fantastic weekend. If you have any questions, feel free to reach out at mtedeschi@perspectivewealthplanning.com or give me a call at 814-580-9881. See you guys next week.